This is the only video you ever need if you want to make consistent profit in price action trading. Welcome to Keys FX. Without further ado, let's get on to this video. Welcome to how to trade using Heikin-Ashi price action. Price action trading using Heikin-Ashi candlesticks is not quite popular among Forex traders. Now this is because traditional candlesticks are the most talked about in the market, while the Heikin-Ashi candlesticks are less talked about. But however, the Heikin-Ashi candlesticks has a much more smoother price action chart, and of course it's more clearer for you to identify trend using Heikin-Ashi candlestick chart. Here is a guide to helping you understand and start trading using price action on Heikin-Ashi chart. What is Heikin-Ashi chart? Heikin-Ashi chart is a type of candlestick chart that modifies the traditional candlestick to filter out the market noise. It uses an average price data to create a smoother representation of the price action, making a trend more clearer. Heikin-Ashi candles uses the average price, which reduces the noise and makes the trend much more visible. The key features of Heikin-Ashi candlesticks are, of course, number one, the smoothing effect. Heikin-Ashi candlestick uses price average to reduce the noise and makes the trend more visible. Another key feature again here is trend identification. Now, when on a bullish trend, a series of green candles pops out, and of course, the candles comes with upper wick. And when on a bearish trend, a series of red candles pops out, and the red candle come with a lower wick. Another key features again is, of course, the reversal signal. The reversal signal for Heikin-Ashi candlesticks is a small body with long wick on both sides, indicating a potential reversal, and a change in candle color from either green to red or red to green is, of course, another indication for a reversal in the market. Now, how to trade using Heikin-Ashi price action? Here are the steps that you need to trade using Heikin-Ashi price actions. Step 1. Identify market trends. When in an uptrend, what you should be doing is to look for consecutive green candles with a little or no wick to the side. And of course, when you're in a downtrend, what you should be looking out for is the consecutive red candle. And when you are in a ranging market, what you should be doing is to look for candlesticks that have wicks on both sides. Step 2. Entry signal. Now, in the upper trend, what you should be doing is to enter a long position when a green candle forms after a pullback. Now, when you are in a downtrend, what you should be doing is to enter a short position when a red candle forms after a pullback. And when it's in a reversal, look for a change in the candle color accompanied by a long wick of either the green or the red on the upper or the lower side. Step 3. Exit signal. Now, you should be taking your profit when you see the trend showing a sign of weakening, which of course you are seeing small body candlesticks or a change in the candle color. Then your stop loss should be placed below the recent swing low for a long position or above the swing high for a short position. When you're trading with the Heikin-Ashi price action, your trading strategy should look like this. Action plan. Firstly, trend identification. Using Heikin-Ashi to identify a strong uptrend, consecutive green candles, or a downtrend, which is consecutive red candles. Number 2, your entry and exit. Wait for a pullback with a small red candle or a doji and enter when the green candle forms. Number 3, your stop loss. Place your stop loss below the swing low or above the swing high. This should be your plan, your action plan when you're trading price action in Heikin-Ashi. Of course, this should also accompany with your DSE, which is of course your directional time frame, your signal time frame, and your entry time frame. So you should be able to know these time frames that you'll be using while you're trading using price action on Heikin-Ashi. Now, if you don't know exactly how to trade with this DSE, you do well to check my other video where I discuss extensively concerning the DSE time frame strategy. This is an example of what we just talked about. Now, this is USD Canadian dollar. Now, on this USD Canadian dollar, we're going to be approaching it as a typical day trader. And approaching it as a typical day trader, we'll be using three different time frames. Now, if you've not watched my video concerning how to align time frame, you do well to watch it where I discuss extensively how to align time frame. So whether you're a scalper, whether you're a swing trader, whether you're a day trader, you must be using three major time frames. And those three major time frames will be the higher time frame, the middle time frame, and the smaller time frame. The higher time frame will be your directional time frame. The middle time frame will be your signal time frame, and the smaller time frame will be your entry and your exit time frame. So that is what we're going to be doing right here. So now we're going to be looking at this. This is the daily time frame of the USD Canadian dollar. Now on this daily time frame, now you can see that we have this indecision, also known as doji candlesticks, and of course we have a huge candle going to the downside, letting us know that the sellers are in the market at this moment. So what we're going to be doing after we guess this, now seeing this, now we know the direction of the market. So the next thing we're going to be doing is that we're going to be going straight right up into our 1 hour time frame, which is of course our signal time frame. Now on our 1 hour time frame right here, we can see also that we have a rally to the downside and then a little bit of a pullback. Now what we are going to be waiting for to get in this 1 hour time frame is a pullback right at a significant level, which is of course this level right here. A pullback right at the significant level, which of course this level right here. So as soon as we get this pullback, the next thing we're going to be doing is we're going to be going straight right up into our 5 minutes time frame. Now in our 5 minutes time frame, that's where we're looking for our entry and our exit in the market. Now as you can see right here, this is 7 a.m. on the morning where this candle had formed correctly. So now by 8 a.m. in the morning, we should be looking for our 5 minutes time frame where we're looking for a pullback and taking our entry and our exit. So now this is our 5 minutes time frame. Now on our 5 minutes time frame, as you can see on our 5 minutes time frame right here, this is 8 a.m. in the morning. Now this is 8:05. This is 8 a.m. in the morning, and then from 8 a.m. in the morning, we had this pullback to the upside, and then we get a huge candle coming to the downside, signifying to us that the market is set for us to take ourselves. So what we'll be doing after we get this is to set our trade, put our stop loss right below, right above our swing high or below our swing low. And in this case, we're going to be putting it right above our swing high, and then we'll be setting 1 risk to 2, just like we said in our previous videos. 1 risk to 2, 1 risk to 2. Let me set this, and then let's see how it rolls in a profit for us. Right, we've just set our trade right now, and then let's see how it plays out and see if we are actually going to be hitting our TP in this trade, if we're going to be hitting our TP in this trade. Now as you can see right here, our trade has been triggered, and then let's watch how it's going to be going, whether it's going to our direction or it's not going to our direction. Like I told you, if you want to go in depth into understanding how this strategy works, you do well to watch my other videos where I discuss extensively on this type of trading strategy, and then how you can maximize profit with it. So as you can see right here, our trade is going straight right up into our direction, and let's see if we're going to be hitting our TP on this trade. If we're going to be hitting our TP on this trade. So that this is how exactly you can trade using Heikin-Ashi price action trading. Now, this good thing about this approach is that it works on all pairs, whether you're trading synthetic, whether you're trading indices, whether you're trading gold, any pair you're trading whatsoever, it works on it. Now, as you can see right here, our TP has been smashed. So this is the exact way we trade in the market and make good profit from the market. Now, one thing you have to know is that using Heikin-Ashi candlesticks is very, very good, and it gives you more advantage in the market. Number one advantage it gives you is that it's smoothing out the noise from the market, and of course, it makes the trend easier for you to spot out. Now, it also helps you to be on the trade for long, maximizing your profit in the trade. And of course, it gives you a clear visual clue of a reversal happening in the market. Now, by understanding this Heikin-Ashi price action trading, you will be able to improve your ability to identify the trend and of course to make an informed decision in the market. If you have watched this video to this time, please kindly smash the like button, turn on your notification bell, and of course subscribe to this channel so you can be getting more content from this channel. Now, until I see you again, keep making every pip count. Peace out.